Right, welcome to the channel. This session going to be the continuation of previous session about accumulation phase. If you have missed to watch the last session, please look at your top right corner. There is a link provided. First, have a look at the first session, which talks in detail about accumulation phase. Come back and watch this video. That would make more understandable. So let's continue from where we left from last video. To summarize last discussion points, we have just started to look at how the market down phase ends by a very huge volume coming in the opposite direction. And then the markdown phase ends with forming a trading range where the accumulation phase was started. During the accumulation phase, how the large investors slowly accumulate their position at a very low price levels. What's the kind of different accumulation types? Is this so long? What we've seen here, it's a very big accumulation that I have taken it for a initial study. There are different accumulation types which happens in a shorter period of time. Along with how do we know accumulation is nearing to an end? That's a very important thing to understand to start the position or the time to enter into the stock to start riding the upcoming uptrend. How do we know how to enter at what time, and how do we can ensure that new uptrend is started after over a period of a long time? Let's start with today's agenda to look at in detail about various accumulation types. What is accumulation that we were discussing? Basically to stop the downtrend, and then over a period of time there is a demand versus supply balance getting moved from one direction to another direction. Later, at one stage, when the supply reduced and demand getting increased, the balance moves towards trend starts. So accumulation phase is where the demand and supply equation is getting fight over a period of a time, and then it decides what direction it has to go next. But during the accumulation, the demand and supply would differ on each accumulation type. So what decides the duration is basically the demand versus supply, the observation duration. That's what it decides the accumulation phase, time and durations. What we have seen is a very long accumulation in the last session as an example. You can see here. But in practical, on a market situation, there are many other scenarios in which this demand and supply play happens, and then we would be able to map it into a certain thing called a pattern. What is a pattern is like the same thing repeatedly happens, and then we name that kind of repetitive events or actions into a pattern. We can identify certain patterns, and then when we are looking and analyzing this accumulation phase, we can apply those patterns to understand the market context in a better way. So when we discussed long duration a pattern, this was just like a few months to many years. What we see in this case is like more than 3-4 years. This accumulation phase was going on, but in reality, few accumulation phases were just like very fast in nature, fast reversal pattern. We will look at climax, V-type, double bottom, pullback, bear trap. Later we will see more similar kind of a patterns, triple bottom reversal, rounded bottom reversal, inverse head and shoulder, and cup and handle. First to start, look at it as the climax. Climax is basically your downtrend reaches to the lowest low and immediately it reverses back. That's basically we are talking about the V kind of a pattern here. So what you see here is a V type of pattern. It's exactly moves back, right? So this is a V type of a pattern. Here there is no much time left for doing any accumulation activities. It's just a price reversal. Next one we were discussing about is the W kind of a formation. We call that as a double bottom. See, in the double bottom, the price touches almost like equal to the same price level. It comes here and touches, goes back, comes and touches, go back. So this is a W kind of a pattern where we call this a double bottom. And there are two other variation of this. Is one is called a pullback, another is the bear trap. What is a pullback? Is like when a higher buying pressure, the previous low, it won't touch, and then it will go like this. So this is a pull back because the price, the last low, it touches, and then the next swing, it won't come and touch that previous low. And due to higher buying pressure, that means the supply is got less and the demand is high. The price moves faster. So this is a pullback kind of a pattern. And then the next one is bear trap. It exactly comes down to the previous price range and then goes up and does the another low from your support line, and then it goes back. See, the idea of the bear trap, this is where normally like the people get manipulated. We will discuss more about that, how the normal retailers and the small investors faked out here, assuming that the price will go further down, but it just momentarily comes below the support line and then goes up. It's a area of a manipulation happens here. So these are all a very fast reversal pattern. If you look at here, let's search for anything to see this one we can see here. So this is a kind of what you call it as like a pullback. And this one is basically, if you remember, if it goes like this, then this is a bear trap. And yeah, so when you look at a chart, you can find out these patterns and then understand the context, what's happening in, especially when we are discussing an accumulation area, when your downtrend is happening, and then if it comes at the bottom, it does, then it goes. This is we call as a double bottom, and if it comes down and then it makes a higher low, this is our another pullback type, and this one is goes and then this goes. This is a bear trap, and the symbol one what we have seen is the V type. So these are all fast reversal patterns. Let's move to another variants and then we'll discuss a bit about. The next one is a triple bottom reversal. As you see here, the downtrend is I mean, the markdown is coming. The prices are going low and you have the support line. The prices touches three times on the same price support line and then it reverses back. So basically your downtrend is reached a accumulation stage by a stopping action, and this accumulation range built with the triple bottoms, and then the price reverses moves to the uptrend. The next type is we are looking at the rounded bottom reversal. More or less the same scenario here. Your downtrend continues. At one stage, it touches the lowest low and reverses back. Meanwhile, how the lowest form gives us a kind of when it comes touches the low, it provides us half of the arc, and when it goes up, it provides another half of the arc. So we got a nice round kind of a shape. And idea again here, it is a reverses the downtrend to an uptrend. The next one is the inverse head and shoulder type. Head is the left shoulder and then the right shoulder. You have to assume the head at the bottom and then the shoulders left side and then right side. And then the top resistance line called a neckline. And this is the period in which the accumulation was going on. And at one stage, accumulation completes and then the uptrend starts here. So that area breakout, we call it as. Typically, the volume also high at the time. The next one is the cup and handle. What you see in the last one is the rounded bottom reversal. It looks very similar to that. But what happens after the uptrend started, there is one other test happens, and that forms as kind of a handle. So all these patterns, or there are more variants as well. What happening here is like basically as we seen how the price action unfolded with the demand and supply, and how long the accumulation can happen before it changes its direction. So we have seen a few examples here. There are a number of other examples as well. You can take any chart and then apply this patterns and see how the price actions and then the volume play happens over a period of time. Let's move to the next agenda of the class today. After a long accumulation, the logical end, it should stop somewhere. The end would happen during the test phase. But how do we know the test is happening right now? For that, we have to first look at it. Key factors like how is the volatility of the price? That's the one important aspect. Volatility means the price bars, how long the price bars on the time duration that we are looking at it. And the next other important point you have to look at it is the volume. You can see here volume and volatility diminishes in the accumulation progresses. The volume is very high during the initial stopping action happening, and the volatility of the price also very high. But in each swing, when it is continuing with the swing, the volume and then the volatility is gradually reducing. As explained earlier, when the accumulation idea of accumulation is to observe the shares. So the capital deployed at the bottom of the price, whenever it comes lower, the huge volume is getting due to the large buying by the investors. And they hold the stock. When every time this event happening, the available float for that particular stock is getting slowly absorbed by the large investors. Yeah, the float is the key here. When higher the float is basically the higher the supply. May be possible for the observation to go longer period of time. When the float is slowly getting reduced, it exactly means that the buyers has already bought as much share as possible, and the open market, there are not much stock left to observe. That would reflect in the price action, also in the volume. So the four factors, what we're looking here is the volume, volatility, demand and supply, along with the float of the stock. So whenever you analyze an accumulation phase, these are all the key things that you have to remember it and apply that into the phase of accumulation. At the beginning, there would be high volatility of the price along with the high volume. And then later point, when the accumulation phase get nearing to an end, the volatility and the volume gradually reduces. You can see that here in the price bars and then the volume bars. At one stage where most of the float has been observed and there are no more supply left in the market, that's when big investors wants to test this before the new uptrend starts. To do the testing, the big investors create the market manipulation on this particular area. How do they do it is basically you have the support line. They force the price to go below the support line. When the prices is going below the support line, it is obviously most of the small investors, again, it's for them the nervous moment because they're already facing kind of a loss. And when the price is pushed further below this support line, it's basically it's breaking its support and it's create an additional panic for them to sell it here. Big investors see that there are not much volume coming at that particular time. That indirectly means them there are no more supplier left because they have already sold and then they left the stock. That gives the confidence to them. The stock has been already been observed over a period of a time. When the test phase is completed, the next comes the new uptrend. As we discussed, a trend to be reversed, first you have to stop the current ongoing downtrend and then the sideways, the accumulation phase. At later point, Once the accumulation phase is nearing to an end, the big investors will do their test by creating a market manipulation activities in the test phase. Once they have confirmed there are no more supply left, that's when the new trend starts. During the new trend, what happens is again, there would be a change of character. What I mean by a change of character? The price and then the volume. Again, you can see the volatility point of the price will increase, and then the volume also increases during the uptrend. If you remember that the price action analysis we have discussed, we apply and then check that is the price is happening with the harmony along with the volume. That gives us the confidence that the new uptrend started. We conclude the session here and we will meet in the next session. Thank you for watching. If you like the video, please do subscribe and share your feedback.